Today, we are interviewing senior analyst of leverage shares, Violeta Todorova. It's an honor to meet you. Let's get straight to the point. The current US stock market is experiencing continuous surges, especially moved around AI stocks like the Magnificent Seven. How long do you foresee this AI wave lasting?
The Nasdaq index has risen 35% in 2023, while the Magnificent Seven delivered a whopping 107% rise. The AI darling Nvidia has been the star performer since the onset of 2023, dragging along other technology AI-related companies. In my view, the shift into AI technology is in its early stages, and the outlook in the years ahead looks bright. Also, the size of the generative AI market at $45 billion in 2023 is expected to increase to $207 billion in 2030, while according to Bloomberg Intelligence, this sector could rise to $1.3 trillion over the next 10 years. On Wednesday, Nvidia reported better than expected fourth-quarter revenue and outlined a bullish forecast for artificial intelligence chip demand supporting this long-term outlook. However, the Magnificent Seven, except Tesla, have skyrocketed in the past 18 months on the back of the AI frenzy and may disappoint investors if they are unable to maintain its astonishing growth in the future. Such event could drag down the whole US market and trigger a short-term correction, which in my view would provide great buying opportunity. So overall, while there are many reasons to be optimistic about the potential of generative AI in the long term, a note of caution is required as the industry faces some challenges.
Over the past decade, the driving force of the US stock market has been the smartphone sector, like Apple. Now, can I say that the market leading theme has been shifted from smartphones to AI and semiconductors?
We have witnessed over the past 18 months that the best performing stocks were AI related, while personal computers and smartphones had a long downturn. Global smartphone shipments have gone through a sharp correction, falling from 1.4 billion a year in the past to only 1.1 billion, which led to a prolonged downturn in utilization rates for some chip technologies. However, demand from artificial intelligence and high-performance computing remained particularly strong, and this trend is likely to extend into 2024 and even 2025.
Korean investors are also heavily investing in M7 stocks, but recently there has been divergence in stock prices among the M7 stocks. Is it okay to keep holding M7 stocks in the portfolio?
That depends on the time horizon of each investor. In my view, most of the Magnificent Seven are well and truly overdue for a correction after such parabolic run, but over the long term their outlooks are still bullish as the AI revolution is still at the beginning. For investors with shorter-term horizons, it's advisable to take some profits off the table as valuations are quite rich and the technical picture shows a divergence between price and momentum, which suggests that internal momentum conditions are weakening and the Magnificent Seven group are prone to a pullback. After Nvidia's blockbuster report on Wednesday, prices could rise a bit further from here, and I see such a strength as an opportunity to lighten up positions in the Magnificent Seven.
Currently, Nvidia is receiving the most attention in the US stock market. But in Asian markets, Samsung Electronics and TSMC stock prices is not good at like Nvidia. So these stocks are unrelated to AI wave.
I don't think they are. The global chip market might be going through a rough patch, but for example, TSMC has found a silver lining in the form of artificial intelligence. The firm is the go-to manufacturer for NVIDIA's AI accelerator chips, which is the hardware used to train computer models that power high-flown projects like ChatGPT. That booming industry has triggered a surge in demand for AI chips, helping TSMC offset some of the slowdown in sectors like the smartphone market. In regard to Samsung Electronics, AI is at the heart of the latest Samsung devices. For example, Samsung's S24 iPhone range was the first to benefit from the company's partnership with Google Cloud. And in fact, Samsung was the first Google Cloud partner to deploy Google's Gemini Pro and Imagen AI models. In January 2024, at CES, the company unveiled its AI for All vision, teaming up with key partners to outline the technology behind this vision and how new products and services use AI capabilities to make life easier.
Are there any Asian tech stocks that can benefit from the AI wave?
Of course they are. Last year, Baidu confirmed that the firm will develop its maiden ChatGPT-style bot, and the company wants to integrate the technology into its existing product offerings. Baidu's main strategy is to incorporate generative AI into its cloud business and its main strategy, and ERNIE will empower its cloud business to use generative AI in its services to cater to new clients. Alibaba Cloud launched its own version of ChatGPT in April last year as well. So the first movers, Baidu and Alibaba, will benefit the most in the near term. Over time, however, there will be more large-scale generative AI models launched by other tech peers, and this first mover advantage will eventually fade. Apart from Baidu and Alibaba, Asian data centers would benefit from the AI boom. Like in the US, Asia is seeing a surge in demand for data centers as giants like Amazon and Google boost cloud services. The recent generative AI wave fuels data and capacity requirements, and the region's growing populations spur storage needs. Demand in Southeast Asia and North Asia is expected to expand about 25% a year through 2028, driven by cloud and AI. The entire Asian market, therefore, will continue to grow, in my view.
What do you think will be the next trend sector to gain attention after the AI wave is over?
Artificial intelligence is clearly the latest craze sweeping the technology industry, but an even bigger trend may be on the horizon in the form of quantum computing, provided it can solve troubling cybersecurity questions. These machines work on a subatomic level and use exotic technologies like super-cold superconductor chips. And quantum computing ultimate benefit is that it solves problems too complex for today's classical computers. And technology titans such as IBM, Alphabet, Microsoft and Intel, as well as a number of startups, are already touting achievements with these experimental machines. Further, cloud computing giants are laying the groundwork to offer quantum computing as a service. But if investors are looking into the shorter term, the oil and gas sector is showing signs of bottoming, and the prospects to perform well in 2024 are quite good in my view. Despite US record oil production, I don't see much geopolitical risk premium into oil prices, and if WTI breaks above its key resistance of $80, crude could quickly rise to $85, even $90, which would propel higher stocks like ExxonMobil and Chevron, and most probably these stocks could reach new record highs.
The prices of the US tech stocks have surged recently. So what should investors be careful about investing here?
One of the risks is US monetary policy. when the Federal Reserve will start cutting interest rates and what the pace of rate cuts would be in 2024. At present, the market is expecting 75 basis points of cuts this year, with the first one coming in June. Any delays in cuts would put downward pressure in equity markets. My other concern is that the frenzy around artificial intelligence has made tech stocks overvalued after such a monstrous run. Signs that the current pace of growth cannot be maintained would certainly disappoint investors. So, for traders that miss the rally after a solid 6 months run, I don't think it's prudent to chase stocks at current prices. And while the longer term outlook is bullish, from a tactical point of view, a pullback or a correction in the short term would present a better buying opportunity. Thank you.
Okay, thank you for sharing your insight today. I hope all of our investors have received these messages.